What up, guys? Welcome to the coffee shop. This is your host and barista, and this is the holiday fun stuff, right? Hope everyone's enjoying their time with their family and just having a nice quiet time with the holidays. No drinking, no drinking. You guys got to be good for the first week of the year, right? There's going to be a lot of big changes. There's going to be some news releases, and on this channel, I will be releasing some. I'll call it like news articles, right? We'll just call it a little podcast kind of a thing, which will help you guys understand some certain kind of backgrounds in crypto that you should be looking at, right? So let's get right into what's happening on my chart. You can see there's a couple of things on here. There's something called the Heiken Ashi Algo version 6, right? This is the version 6. And there's also something that looks like the MACD, right? Well, yes, you would be right. That is the Heiken Ashi Algo. It's a new one that will be coming out next month for the month of January 2024. And there is a new MACD that will be coming out ahead of it. Now, I'm putting out this MACD because there's a lot of traders that are new to the market, and they always have trouble using the MACD because they always fall for that same myth. Get the MACD cross over here, cross over there, cross under this, whatever. And I keep seeing these strategies, MACD crossover, do this, MACD cross. What? Stop it. Just cut it out, okay? Really, crossovers, stop all that stuff. I've created a version of the MACD that you will only be able to get. Okay, stop what you're doing right now. I know what you're doing. You're going to your indicators tab, okay? You're going in here and you're trying to find it. It's not in there, okay? It's not released yet. Calm yourself, Chico. So this is called the MACD, right? It's called the MACD, but it's called the dynamic, okay? Momentum imprint, okay? And of course I spelled it wrong. Momentum there with a T, right? It's the MACD dynamic momentum imprint, okay? That's what it's called. Now, stop. It's not in TradingView. Cut it out. You can only get this. You will only be able to get this by going through that website right there. Okay, coffeeshopcrypto.net. Join the website. You'll get information about when it's released. And what I'm going to be doing is for everybody who gets it, you will have it for the first 15 days as beta testers. So any updates to it, you guys will get. Other people will not get those updates. And I'm doing this for the first round release, okay? There will be 2 releases of this. The beta testers will have it on their charts. It will be limited. So join the website now. I will be able to track who joined, and anybody who got in early will be beta testers for this MACD, okay? Now, of course, you're going to want to know how to use this thing, really, right? Well, it's kind of self-explanatory. The MACD is a momentum indicator, right? And it tells you when you have the trend or when you don't have the trend. So let's just take it from the perspective of like new traders when they look for these MACD crossovers, okay? I don't need to put the MACD in the signal line on my chart for you guys to understand, you know, what's happening here. I mean, I could put it up here. Let's see. You will get the signal here and this here, right? You can see the crossover takes place and the histogram switches sides. The crossover takes place, histogram switches sides, right? Okay, great. So we got that. So let's just take this off just for the purpose of being able to see this. So what you're doing here is you need to know, are you in a trend or not? Okay, so in overall right now, I have an uptrend going on. So I only want to look at light red, okay? I want to look at light red and dark green. That's what I want to see for my crossovers, essentially, if you want to go for your reds and greens, right? So you can see that while you're in your uptrend, you end up getting a light red. So that means this you should be able to continue a scalp long. That's what this is, okay? You have 4 different ways of trading, and this is for you new traders. You don't just have longs and shorts. What the market does is it moves up, it moves down, and it moves sideways. But just because it's moving up doesn't mean you're taking a long. You could be going scalp long, which means you only go as far as your previous pivot or your previous resistance that's above you, okay? So to show you what that looks like, here's an example, right? I'm just kind of picking something out of the chart here. So you know that you're in an uptrend. Overall, you're in an uptrend. You get this red business, and I said you're looking for the light red, okay? So you can only go for your previous swing high, which is right there. Now, here's the real cool thing. If you close above that swing high, okay? If you close above that swing high and you do not have a momentum candle, which is a dark green candle, If you close above that, you don't have that. You can only go for the next swing high, or you just stop, okay? And here's your, let me see here, the next swing high this is the actual swing high right here. Like there's this one and this one, which is just a little bit higher. You want to go for the next one, and it's right there. So it's basically telling you that this trade is not worth taking. It's so close to where you are, don't bother doing it, right? Now, again, for me, you guys need to know bullish candles make highs, bearish candles make lows. That's the rule that I follow. So this is not my previous, from here to here is not my previous swing high. My previous swing high is from here to there. See, that's a bullish candle. That's where I'm going, right? Go right there and ends up getting right to that level. Just a little bit, just a little dip below it, right? Right there. And that's it. So that's your move. And that's because this candle, right? This candle closed above that pivot, but it was a light green candle. And that's as far as you're going to go, right? Now, when you close above a pivot with a dark green candle, okay, here's a high, light green, right? And again, that previous high over here, okay, just kind of lining it up. Nope, still light green. And another swing high. Here's a really grotesque one. This is just awful, right? So there you go. That's a right there. So you can see it's a dark green candle. And if you analyze the candles, you can see that, see this long wick on top? That means you're pushing into resistance. This one has a short wick on top. You closed, you must be above resistance. You must be. So you close here and you can start taking in nice long. From here, you get a nice big trade up. But everywhere else, you got a smaller one, just like smaller trades. That's all you got because you're pushing into resistance. So that's the benefit of having these color schemes color your bars for you. And that's just a quick little reference of how you use that. And again, that's if you're already in an uptrend, right? If you're in a downtrend, you want to know when your downtrend is over, like when you should be stopping, right? And again, so you can see you're red when you're in your uptrend. You're red, you have a downtrend going on because you got lower highs, lower lows, right? And then you see this little stall here. What you want to know about is when you have light green in a downtrend, that would indicate a pullback. When you have light red in a downtrend, that's a stall. Okay, that's a flat out stall. You need to break another low. You have to. So if you get a pullback, right, find the low of your pullback and close below that. That's it, right? If you're in a downtrend and you get a pullback, close below the low. If you're in an uptrend and you get a pullback, okay, a pullback would be a light red, okay? You're in a uptrend. I don't get any light reds except for this one. You want to close above the high of the light red. This doesn't really have a high because it's got nothing on it. There's no high up there. There's nothing there. I want to see a high, like a swing high on it. So this has nothing, so I wouldn't take this, right? So here we are in an uptrend with a light red, okay? You want the first red, light red candle, close above that, okay? Right there, green candle. Take your longs. That's it. Another light red one, right? You're still overall in your uptrend. Light red one, closes, green, right? Dark green. Take your longs right there. So there's going to be a number of ways that I'm going to show you guys how to use this. And this is right now, this is just kind of, just kind of glazing through. That's why the information seems a little bit broken. But so that's what's going on here with the dynamic momentum imprint. This will help you understand more of what's happening with the MACD. Do you have the trend or not? For example, here you get the cross down, right? But they're light red bars, so you don't take this downward move. You get the cross up right here, but it is a light green bar, so you don't take the move. If you took this move, price would pull way back against you, okay? And if you took this move, you would just be stagnating, waiting for the trend to begin. So that's just a lot of, what's going to help you in this thing. So let's move on real quick to the new version of the Heiken Ashi algo, right? So basically, first thing everybody's going to say is, hey, is that the new stochastic? No, it's not the new stochastic. This area in the center, it's not. This does not have a stochastic RSI in it, and it won't. I don't want to put one in there. This is a liquidity zone, okay? And this is bearish liquidity generating, bullish liquidity generating. And every time the Heiken Ashi candles travel through this area, what they're doing is they're picking up that type of liquidity. So right here, the candles are red and they traveled through bearish liquidity. So it's a nice drop happening, right? And then you've got green candles forming, not too many, mostly red candles, and they're going through bullish liquidity. So you're going to have a rise, but it's not going to go that far. And then, right, you get this little tap right here into bullish liquidity. So price rises again, see? And then you start tapping into bearish liquidity here. So price falls, okay? It continues bearish liquidity. Now, here's the cool thing. For example, you would see that these candles are changing to green. But if you look backwards, just look backwards, what did they do? Did they touch any bullish liquidity? No, they did not. They touched bearish liquidity. So as the RSI and these candles rise, you know that this is going to be a fake out. You need bullish liquidity to have a long. If you have bearish liquidity, you're going short. And that's exactly what price does. So this turns into a predictive tool for you now. As powerful as the Heiken Ashi algo was before, it's even more powerful now. Okay, you collected bearish liquidity right here. RSI rises. It's a fake out and will fall. Again, takes more bearish liquidity. Price falls again. Comes up and you take bullish liquidity. So now you have your rise.